What's been happening in the market? And more importantly, what does that mean for you? Welcome to LVZ Market Minutes, the quick and refined update designed for savvy investors who value clarity over clamor. Our team breaks down the trends, movers, and the headlines that matter so you can stay informed and cut through the noise. Let's dive in. Past performance does not determine future results. Securities offered through Harbor Investments, Inc., member FINRA SIPC. Investment advisory services offered through LVZ Inc. LVZ Inc. is a federally registered investment advisor.
So, Joey, January has seen a lot, flip to 2025. There's a lot going on in the markets, in culture, in technology. Yeah. It has been packed full. So I'm excited to take a look back on January and say, hey, what was in the rearview mirror? What are we looking at on the front end, January 2025? It's also the longest month of the entire year. It feels like week number 10 of January. So much has happened.
Yep.
What were some key things in January as far as news that potentially had an impact on markets or didn't? Talk to me a little bit about the noise that you're deciphering with our LVZ Investment Committee to help put a pulse on the market, the economy, and also client concerns and questions.
I think one of the big things we're looking at in this coming year with the LVZ Investment Committee and we've started to see play out in January is that the valuations in the equity market in particular are very high, which is kind of to say that people have priced in future performance into what they're willing to pay for something now. Often that comes off the back of 2 really good years in the market. But what can then begin to happen is kind of like you're saying, news starts to come into play where anything less than a perfect piece of news makes people reconsider their valuation of that equity. So there's been already a couple examples where there's been, quite frankly, pretty good news, economic news or even earnings reports for companies. But since it was unexpected, it just made everybody kind of panic about how they'd valued, and they wanted to reevaluate how they were evaluating stocks in the markets. So that's a big kind of topic we're seeing for this year. And we've already begun to see it play out in 2024. Earlier this, very beginning of January, there was a jobs report that came out with way more jobs had been launched than what was anticipated. Mm-hmm. And the market kind of freaked out. The stock market went down a fair amount that day because sort of the general idea was, that means that the economy is doing well. So that means they're not going to cut rates. So that means my stock isn't going to do as well. So that means my portfolio is not going to do as well. So that means I've overvaluated this stock. You can start to see where there's so many things that have been sort of priced in, so to speak, where assumptions have been made off of so many contingent things that when one thing is different than what's expected, it sort of starts this domino that can really cause to a lot of overreaction is what we're seeing. So that's been a big thing kind of coming into play.
And January is on track to end high. We're about to close out the month today officially at the end of the business day on January 30. What does that mean for the rest of the year as far as an outlook?
So after kind of a weak December and a week early January, the markets were a bit tense earlier in the month, and then the CPI.
Consumer Price Index?
Yep. The CPI came out a little bit lower, which is good. That's kind of a general benchmark of inflation, a little bit lower than expected. And I think that eased a lot of nerves. People were kind of getting worried that inflation was stuck. It wasn't going to go down. So that, I think we started to see the market sort of calm down a little bit there and start to pick up on the growth from the end of the year again. And so, it's looking to finish positive. Historically speaking, generally when January finishes positive, that's a good sign for what you can expect from the calendar year. And of course, we know with all markets, it's far from a guarantee, but there's good trends and good historical statistics that are going to give us some confidence that it sort of sets the stage for a good year.
So as far as things that shifted, you talked a little bit about the jobs report that came out and was different than anticipated. How did the LVZ Investment Committee respond to some of the things that shifted in January? And what does that mean for clients looking forward for the year?
Kind of 3 main things we look at in particular is we're trying to be very aware of earnings reports as those are coming out, especially in sectors and stocks that we're having more of a focus in. We're paying attention to interest rates. Because that does affect a lot of stuff for the consumer, a lot of stuff for the markets. And then lastly, we look a lot at economic indicators.
The GDP came out just yesterday,
Right.
was released. So that came in at 2.3%. Was that expected, unexpected? Talk a little bit about how that impacts some of our outlook too.
Right. So generally what we've been seeing is that stuff has been pretty consistent and signs of a healthy economy. We're not really seeing a lot that's concerning us. So our general outlook and our perception of these reports is good. We're not seeing anything that's really making us be too concerned.
All right. So you talk about watching company earnings and emerging technology, right? So the impact on AI into companies, and that's a heavy R&D spend right now for companies to drive that revenue. Talk a little bit about how you're seeing that impact the market and maybe some noise that's happening in the headlines. What are some insights related to AI?
Yeah, I think that's obviously a huge storyline right now, and it's a kind of a big unknown development. We're not really sure where it's going to go. There's a lot of stuff we're still learning. Prior to this point, really over the last kind of quarter to a year, a lot of companies have been coming out saying how much they're going to spend on research and development for AI. The capital expenditure is pretty significant. Just a couple days before the sort of the DeepSeek research was released, there was the big report about the Stargate, which was going to be paired with a $500 billion investment into AI development infrastructure. And then 2 days later, this DeepSeek thing comes out that's talking about how much cheaper it was, how fewer chips they needed. And it sort of made a lot of people question, okay, did we really need to put this much money towards the development? And so we still don't really know how that's going to play out. We don't entirely know how the U.S. government is going to respond to this AI program from a different country. We don't know. There's some talk now that there could be some questions in how they were teaching this AI. So there's a lot up in the air, but it definitely brings into conversation how much are companies about to spend, and do they need to spend that much? That event, again, it kind of goes into these valuations where people have sort of built up this valuation because, oh, such and such company, they're going to be the best because they're spending the most on AI development. And so you value this company a ton, you'll pay over the premium to get it. But now you find out they don't really need to spend that much on AI development for what we know at this moment. And then you think, oh man, have I overspent for a company that's overspending? That's a big one. We really don't know how it's going to play out, but it's started making some waves in the market to where we're going to see what happens. I think the general consensus macro is that this is good for AI development. Mm-hmm. If we can do it cheaper, if we can do it more productive, fantastic. That's great for everybody.
Right. And I know the initial concern with AI was job replacement and right. losing jobs. But when you look historically at the economy, anytime a new technology was introduced, we evolved with it, and right. it created more jobs on the flip side because of efficiency right. and capacity. We were talking a little bit earlier about it just changes the dynamic of output for employees and for professionals, with taking something that's pretty standard and instead of having an employee do it, allowing AI to develop and then launch something further from what AI has developed to capitalize on right. the creative output or elevating a product or service or a process to the next level. Thinking about the impact on capacity, efficiency, and what is able to be delivered by companies is really huge, and it's exciting to think about. But you're right, the ease in which you can develop technology is also exponential now. Right. And the cost spend on it is something that we have to take into consideration in what companies are demonstrating as far as their R&D spends. Is there any impact on our investment process with AI being introduced?
No, I wouldn't say that we've shifted really anything in how we're investing and how we're positioning our models. One of the things that we're really on top of in communicating with ourselves internally and working with clients is that we're not chasing performance. Just because a stock or an index or a sector ran up some huge amount the previous year, we're not going to chase that. We're still going to look at the fundamentals. We're still going to look at the core of our investment theory and making sure we're making decisions based off that. So while we've seen great opportunity in technology, in AI, we haven't tried to chase after that, to overweight to this, to make sure we're capturing every bit of performance that could be in AI. So I really don't think it causes us to reconsider much at all, really. We're still super optimistic for what the future of AI can do for individuals from an economic standpoint, from what it can do for the market as far as how it relates to our clients and the people we're working with. I think at this point, a lot of what you can see in it is the growth and implementation of it is probably not going to be so much limited by the technology. It's going to be limited by, let's make sure we know what we're doing before we sort of unleash this new world. Let's kind of figure out what are the parameters, what does it mean to people, and how does that come into play. So yeah, the technology is going to advance super, super quick. But I do think that as of now, it seems that there's a good head on people's shoulders of making sure, okay, what does this mean before we just start flying into it? So I'm pretty encouraged by that.
It's an exciting time to be serving clients and managing investments. As far as one of your favorite pieces of what you do, you work with portfolios and numbers and data analytics all day long, but the fun part is being able to see account and client information and know that it's an actual person and that they have a very specific plan for their financial outlook, and being a part of that and doing heavy lifting for them within the markets is really exciting and fun. And being a part of the team at LVZ that puts that together is the fun part for me. And you alluded to that in our opening segment about your favorite thing about LVZ and is being a part of our team and the people that we serve. We have clients all across the country. We serve a multitude of advisor offices in different capacities as far as scale. What's your favorite thing about interacting with our clients and with our team of advisors?
As you said, I love looking at the numbers. The storyline of performance or the storyline of what's happening in a client's account is a little more complicated than just the number. And so I like being able to get to dig in and provide an answer to a client's question of like, oh, I expected to see this, but instead I saw this number. Why? And what's beautiful about numbers, and this is pretty non-abstract math, is there's an answer. If I can dig into whether it be transaction history or the way things are coded or the timing of deposits and contributions or distributions, everything has an answer. And to be able to then articulate that to a client or to the advisor working with the client, yeah, I love that. I love getting to be able to provide a concrete answer. If you're not a numbers-minded person, it's impossible to find the answer. Right. You look at your account and you're just like, I don't know. I can't understand what's happening. And so to be able to provide communication of this is what's happening, and it's exactly what it's supposed to do. This is what should happen, and it's exactly what did happen.
It's really enjoy it. As if you're a translator for what's going on in the market to a client who's seeing a result that they're not necessarily able to interpret. So you do that so well, so thank you for that.
Yeah.
That is something that's really unique, that our clients have access to you, and they can call our office and ask questions. They can call their advisor and ask questions to dig deeper and find answers if they want to. Being able to have that hyper-personalized response for their portfolio is something that I value highly as a team member, to deliver that to clients. Words of wisdom for the month of February, Joey.
Words of wisdom for February. Probably don't overreact too much to anything that happens over the next month. And if you've got questions, please reach out to us, and we'd love to talk through any questions you have. Anything that you're wondering how it impacts you, how it impacts your portfolio. We're hyper aware that everybody has a different financial situation. And we talk a lot about there's market noise and tuning things out, but sometimes some people, it does matter, and it does make a difference in the short term. There's people who they're kind of in the stage where they're beginning to pull on their retirement accounts. And when you time that and how much you're taking out, when it does make a difference. We want to help with those conversations. Yeah. And we don't want to just tell you, oh yeah, don't worry about it. The market will be fine in 20 years. But if your horizon is the next 4 to 5, we want to walk you through that as well.
That's what the LVZ Investment Committee really helps provide, is that long-term planning in the markets, and our financial planners deliver that hyper-personalized plan based on client situations happening in their life. So beautiful. Joey, thanks for your time. Thanks for recapping January for us and providing an outlook for the remainder of the year, what we're looking at in the month ahead as well. See you next time.
Yeah, looking forward to it. Thank you.
That concludes this month's LVZ Market Minutes. quick, clear, and curated to keep you informed and empowered. If you found these insights valuable, be certain to tune in each month for a strategic update. Until then, stay informed, stay invested, and have peace of mind that our team is actively monitoring the markets and managing your portfolios.